July 2024. Here we are.
Here we are. Rate
Positive.
cut.
Rate cut. Bonds, which drive fixed rates.
Right.
They're almost at their low point for the year.
I'm so excited, Nick.
It's the best.
I watch that bond market
I know
every
you do.
single
I
day.
know you
every
do.
day.
When we talk about investors, there's like long-term investors, and then there was also like flippers and short-termers and speculators. Those people are gone from the market.
The other reason
gone.
those people are gone, Nick, is because the Landlord-Tenant Bureau is 12 months behind.
That's great. So here we are, another episode of Real Talks. You know what I love about our Real Talks episodes
What,
lately?
Nick?
They're so damn positive.
They are, finally.
I mean, July 2024, here we are.
Here we are. Rate
Positive.
cut.
Rate cut. Another one, 0.25. So we were watching it today. It's earlier than it used to be.
Yeah, I think like 9:45 is the magic number now. It used to be 10 a.m.
It used to be 10 a.m. So I was
they're not
driving
doing
along.
that anymore.
My reminder came up, Bank of Canada announcement, like 15 minutes before sort of thing.
Yeah.
So I logged in. It's already published.
yeah.
I'm logging in, watching the live stream. You're texting me, cut. I'm like, oh, this is good. So it's earlier now.
Yeah.
It's a nice way to start your day.
Absolutely.
Rate cut, Do you remember the dreaded years where we're like up? So we were talking about the math on this. $100,000 owed on a mortgage.
Yep.
0.25% cut saves you $15.
Times.
2. So $30 on every $100,000 between the June cut, the July cut.
Right.
Nobody has a $100,000 mortgage.
No.
So let's say you have a $500,000 mortgage. Well, you take the $30, multiply it by 5. It's $150 in savings.
That's $150 you didn't have yesterday.
Isn't that great?
Yeah.
Yeah, that's awesome. So, at the end of the day, there's relief. There's relief coming
There
for
is.
people that have been really restricted with payments, interest, high interest rates, and that sort of thing. When this happens, we get a whole bunch of phone calls from people with fixed rates. When's it going down? It's not going down. So that's the first thing that people need to know.
Not today.
Not today.
But
if they have a mortgage coming up for renewal, they'll benefit from it.
Yep.
If they have a variable rate, adjustable rate mortgage, they'll feel that relief in like 2 days.
Yep.
It's great. If they have money owing on a home equity line of credit, they'll see the relief right away. That's all great news. And for those that are buying, fixed rates are going down as well.
That's right. The
So-
bond market reacted right after the Bank of Canada made the announcement. So the bond market started going down, which means that eventually we're going to see fixed rates come down as well. Maybe not today.
That's it.
It may take a week to
Yeah.
work through the system, but it's funny because when the interest rates were going up, everybody expected that it was going to take time to work through the system before we really felt the effects. But when they're coming down, everybody wants immediate satisfaction.
Immediate.
It's like, I want it now. I want it now.
That's right.
It is coming now.
Yeah.
And even when the Bank of Canada cut in June,
Yeah.
it wouldn't have made sense that it would affect 5-year rate, but they did because
It did.
the bond market went down and all
Yeah.
of a sudden we have less 5-year rates.
The conversations are way easier with borrowers
Yeah.
lately, right? Like almost every mortgage that we're doing for an A client with a bank, for example, is under 5%. Compare that to 8 months ago, 9 months ago, it was 6%. It was over 6%,
It was
for
over
example.
6.
So the challenge with rates at that point is nobody wants them.
No.
Well,
Nobody can afford them.
nobody can afford them.
Everybody wants them.
Yeah.
They just can't afford them.
On the most basic level, if somebody's buying a Honda Civic, they won't buy it if they know it's going on sale next month.
No, and that's where sellers have been stuck in
Yeah.
the last little while, is not knowing when is the right time to pull the
Yeah.
trigger. So
Yeah.
we've had a lot of that as well. Even though we have more homes for sale now than we did a year ago,
Yeah.
we're still finding that people are confused as what to do. And I mean, who's to blame them? If I knew that I had a product and that maybe in 3 months the rates would be lower and there'd be more buyers, why wouldn't I wait?
Yeah.
The reason I wouldn't wait is I'm not sure what's happening in 3 months. If the
Yeah.
Bank Canada comes out in September and says we're cutting by 50 basis points, that means we're in trouble. That
Yeah.
means the economy is in trouble.
Yeah.
So if we are heading into a recession and home prices don't collide. They don't go in the same direction. Like if we're in a recession, we are not going to see increased home prices.
It'll drive it down. Yeah.
100%.
Yeah.
So
Yeah.
that's why I caution people. I know what I'm dealing with today.
Yeah.
I don't know what I'm dealing with in 3 months. So that's why I would probably sell today, knowing that there's more buyers coming in. Every time we get a quarter point decrease, we get more buyers in this system.
Yeah. And the people that are selling today, I suspect, are the people that have a motive. So
they're serious sellers.
Totally. Because if somebody, for example, is putting their house in the market and they can wait, those aren't the people that are decreasing their prices.
No.
And, getting to where they need to be in the market.
No.
The people that are truly selling have been relocated to like Alberta for work, for example.
Yep.
They have a timeline. They have a deadline, most importantly. They need to sell. They'll listen to your advice and they'll say, I know I listed at 9. I need to be at 8.75 and then 8.45 and then 8.25 until I sell.
Yep.
Those are the homes that are selling. Now, pretty sells and the good stuff sells, the desirable stuff sells, but we're talking about like the general market.
And more than ever, I find that pretty sells right now. And there's a reason for that. Because when somebody's coming in and buying a home that's $850 and it's pretty, it's blinged out, you don't have to do anything to it, that's a confident buyer. But when you have an $850 home that could be $9 if it were pretty, that $850 buyer doesn't have any extra money to put down on that, to put into that home. So they have to accept it the way it is and be able to live in it, or they don't have the disposable income to make it any better.
I talked to a client yesterday. Now, this guy is in the business of making a home better, I'll say, okay? So he knows, like it's not you and I. This guy can put his hands to work and make the house better. He's buying a home that is like 4,000 square feet, okay? Big house. And it's all dated. It's over $1 million. And I'm clicking through the pictures. The roof needs to be done.
Yeah.
And that's
a big roof.
So I said to him, how much do you think that roof is going to cost? He said, well, I'm going to do it myself.
Oh.
But if I had somebody do it, that's an $80,000 roof.
Yeah, everything costs money, and people don't have it.
So think about the average buyer who's like, like traditionally moving up, right? They sold their townhouse, they bought a small detached. Now they're going to sell their small detached and buy their forever home. They're going to put a few $100,000 down on it. They bought the house for a $1.1 million, okay? They better hope they have $500,000 down, for example, because if they buy for 1.1, that's a $600,000 mortgage.
Yep.
It's going to cost them $3,500 a month, and they still have to do the driveway, the roof, and all that sort of thing. So you're right. Like if the house is done, it's done, and that's probably why we see there's really nicely done like new modern townhouses that you see in the south end of Barrie,
and they get more money.
They get more money,
and they sell right away. And you're thinking, why in the world would
because they're shoe boxes too, right?
Why would somebody buy a pretty townhouse over an ugly detached?
Yeah.
And it's because they don't have any income, any more money,
disposable income to do it as they go.
They need to live in something that's livable today.
Yeah.
And that's why
it's
more important than ever to make sure your home's ready for sale before you put it on this market.
Yeah. And that's really interesting. So, you commonly ask me, are you busy? We are generally very busy right now. And we are busy with people who need to do something.
Yeah.
Their mortgage is up for renewal. They have to do something. And it's tricky. The conversations are so difficult because again, we were joking. I said at the most basic level, my 11-year-old has a toonie in his pocket and he wants to buy a popsicle. He's not going to buy the popsicle if he knows he can get it on sale for $1.50 on Saturday. But if he knows he has to spend his money today, he's going to look for the best price popsicle he can find.
Absolutely.
If somebody's renewing their mortgage today, they have to refinance. They have to buy and sell because they have something else going on, separation, relocation, whatever. It's a very competitive interest rate market right now because people know they're heading down.
Yep.
They have their finger on the pulse of exactly what's happening. They know the best rates that are available in the market.
And all banks want to fight for market share.
Totally.
So,
when rates were 2%, people would laugh. I'd say, I got you 1.89. They'd say, sign me up.
Who cares?
They didn't care that, maybe there was somebody out there at 1.79.
No.
1.76. Today,
they care.
Oh, if we quote 4.97, I get a call the very next day saying I found 4.94.
Yeah.
People, and they rightfully so, need to save money right now. And they're very rate conscious. When rates are going down, it's an everyday thing right now. Rates are going down every day, every week. We were just talking about bonds, which drive fixed rates.
Right.
They're almost at their low point for the year.
I'm so excited, Nick.
It's the best.
I watch that bond market every single
I
day,
know you
every day. And when I looked at it this morning and it was heading down and we're close to January's bond rate.
Yeah.
So in January, I remember you called and you said, you're
Lowest.
never gonna believe what I just got. And I'm thinking, what? You got 4 point.
I think it was like, it was probably like, it was below 4.5 and it was above 4%. Okay.
Yeah,
So
just.
yeah.
Maybe 4.2,
Yeah.
4 something.
Yeah.
So that's,
We got one. That was all we
I
got.
know,
Yeah.
But I've never forgotten it.
Yeah.
Nick.
And we're going to get there again.
Well, I'm 100% certain.
Yeah.
And you know what I'm really certain about?
Yeah.
Depending what happens in the States, because our 5-year bond market is dictated by their tenure. So they've been talking hold for quite a while now.
Yeah.
And they're at a point where maybe they can drop, but they're still not 100% sure. But the problem is, if they wait till anything after September, it's too close to the election to do anything about it.
Yes.
So they may just drop.
It's so funny because we're cutting right now to deflect, a lot of bad things that are sort of imminent in the economy. Like our economy is not super stable right now.
No.
I mean, there's a lot of people hurting. While inflation is in line, food prices remain high, oil prices remain high. There's a lot of people struggling, right?
Well,
interest and shelter costs,
And it's funny because, the Bank of Canada finds themselves in such a difficult position because we've had so much immigration
Yes.
that our unemployment rate should be going down.
Yeah.
And yet it's going up. So, a lot of what we see as reality has been completely masked by the amount of immigration we've had in this country.
Totally. Yeah.
So that's what I think they worry about. And I honestly feel that I always thought that the governor of Bank of Canada was worried about, the differential between the United States and Canadian. Yeah. He doesn't seem that worried about it.
For 2 years, we were worried about that.
To have a buffer.
Yeah.
And I think that buffer, because he did leave a clue once, and he said, look, in the past, we'll tell the future. And I believe that buffer is about 2%. So we do have some leeway.
Yeah.
But I think they're going to start cutting sooner than later just because of the timing of that election.
Do you think the Federal Reserve is going to cut on July 31st?
I'm thinking they almost have to because anything after that is way too close to the election.
I couldn't agree more. And generally, their economy is strong. It's much stronger than the Canadian economy right now.
Yep.
And I kind of feel like, the Bank of Canada is making these cuts to keep us stable, knowing that Canadians need relief. And I think when I look at the American economy, it's like they're charging forward. It's like USA, let's go.
I know.
And they're going to cut in advance of the election because all things are good. People are spending the right money. Their numbers look great right now.
They do.
For a lot of reasons.
Yeah.
For a lot of reasons. So
and it's interesting when you think about it, if we hadn't had that huge bump in immigration, what our numbers would actually look like. Because that's what I imagine that the Bank of Canada is looking at.
Yeah, new GDP.
Yeah.
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 Yeah. Net new GDP, new people, new Canadians, new dollars, new spending. Right. Absolutely.
And that's what's keeping our economy masked.
Totally. And still, if you're looking to hire somebody in the trades, I mean, you're still going to have a hard time finding a very good qualified tradesperson.
Yeah.
They are in very high demand. They're still charging good money, great money for their work. And I'll tell you, if you have a disagreement with that tradesperson, they will happily pick up from that job site.
Go to another.
Because they know that somebody else is waiting, right? And that doesn't necessarily help our economy still, right? I mean, that's not what the government is looking for. And the government, the Bank of Canada has made comments on that in terms of unemployment and that sort of thing. So like certain sectors are still not where they want them to be.
No.
No.
And that's why I think that they truly are taking this meeting by meeting. They truly are.
Yeah. And would you say that September? Okay, so let's take a look at this. June there was a cut. July there was a cut. There's no meeting in August.
Right.
So one of the things that we talk about commonly is when they started talking about a cut last time, before June, the housing market reacted. Yeah. Consumers were like, hey, I want a part of this, right?
Yeah.
I want to buy a home at a discounted price before interest rates get cut and everybody finds out about it.
Exactly.
They cut in June. Nothing really happened.
No.
They cut again in July. I don't think anything drastic is going to happen.
So why don't we meet in August, Nick?
Yeah, let's do
And
it.
I will bet you dollar for dollar, we can pretty much know
Predict.
if they're going to
Yep.
cut in September,
Yep.
dependent on what the housing market does July, August.
100%. So,
Yeah.
so tell me, I'm so excited to hear this from you. What do you think is going to happen in the housing market in July and August?
So I've always felt that this market's going to be backloaded
Yeah.
this year.
Meaning
I've
Q4,
I've
like
been saying
September to December.
Q3, Q4
Yeah.
is going to be better
Yeah.
than Q1, Q2. We never
Yeah.
had a spring market. We've only had
Yeah.
a little bit of relief. When I was urging people to list their homes in December and January, I wasn't crazy. It was the lowest point we had in the bond market, and it was the cheapest mortgage rates.
Yeah, totally.
So it's
Yeah.
a complete reflection on what's going to happen. So if the Fed drops in July,
July 31st. Yeah.
right?
Yeah.
So if they go down, our bond market will go down further. Our 5-year will go down further.
Crazy.
Yeah.
Yeah.
So that means
yeah.
we can afford to drop again in September.
Yeah.
And that means we will finally get a spring market we never got.
I couldn't agree more. Okay. So the conversations with people right now about interest rates are generally good. Again, 4.5% ish for a first time home buyer, 5% ish for somebody who's renewing or putting 20% down. Those are good interest rates. They're all like, as soon as you come in below 5%, people are happy. People are generally very happy about that. If that continues to go down, and we're talking under 4.5% for a first-time home buyer, people will be very happy.
Yes.
And if I tell people that are renewing their mortgage today, keep in mind, they got their mortgage in 2019, pre-pandemic, not super crazy low. Okay, that's next year. So if they're renewing their mortgage from a 3% interest rate to like a 4.5% interest rate, that's good. They're happy about that.
Yeah.
Generally, they're not, it doesn't leave them feeling uncomfortable.
Well, I'll tell you something that I've noticed.
Yeah.
4% is our magic number.
Oh, yeah. Yeah.
The magic
Yeah.
all happens at 4 and less.
Peggy, can you imagine if there was a 5-year fixed rate at 3.99 right now?
People will be going berserk.
Berserk. And it's coming.
And this is what the sellers are waiting for. And they're waiting for February 2022 prices to come back.
Yep.
But what people are forgetting is that the interest rates were at 2% then. And we're never seeing those again.
Yeah.
And if we are, it's because we're in another pandemic or something really bad has happened and we just don't want to be there. But that's what happened. And we lost an entire division of people, of buyers from this market. We lost the investors.
Oh, yeah.
And they're
totally.
not coming back.
Do you know how many people don't know about the anti-flipping tax?
Yeah.
Okay, the anti-flipping tax is, it doesn't matter if it's your primary residence or not. If you sell a home in less than 12 months, the capital gains does not apply. It's full income tax.
Yep.
So you buy this beautiful home and you hate the neighborhood. You want to sell in 6 months, and Peggy says, I have good news for you. You can make like $100,000. You're going to make $0. Because by the time you pay for selling costs, moving costs, closing costs, and the fact that you have to pay, I don't know, 40 or 50% of tax on every dollar you make, you'll lose money.
Yep.
So investors, when we talk about investors, there's like long-term investors, and then there was also like flippers and short-termers and speculators. Those people are gone from the market.
The other reason
gone.
those people are gone, Nick, is because the Landlord-Tenant Bureau is 12 months behind.
It's crazy.
So you have a tenant living in your unit and hasn't paid you rent in, I don't know, 8 months. You got another 4 months of letting that person live in your home with no rent before anybody even hears you.
Have you heard of Open Room? Have you heard about this? It's crazy. Open Room is a website. It's like a Google search.
Yep.
You can search an address.
Yep.
You can search a tenant name. You can search a landlord name. People are uploading, cases from Landlord Tenant Board, eviction orders, judgments, stays,
Amazing.
Notices.
Amazing.
It's all there. It's like a
More
central
information,
database.
the better.
It's wild. I mean, we've never had that before.
No.
And it's open information. It's open data, right?
But we've also never had a Landlord-Tenant Board that's a year behind.
Never.
Like, it's too much.
No,
It's too much.
But
They've made the laws so restrictive
Yeah.
in this province, not this country.
No, province.
Because Alberta doesn't have these problems.
Nope.
Ontario has these problems.
They have so we're going to go back to an environment where home prices potentially are high.
Yep.
And you have to deal with that. So you're right. Like, the investors are gone.
They're
so going back to the conversation about the pandemic. Okay. So February 2022 levels. Everybody loves those house prices. You hated that time.
I hated it because I knew it was about to burst.
Yeah. Yeah. So interest rates were 2% or lower, for example. And I don't know if you remember that point in time as well. Interest rates started to go up and home prices were still going up at the same time. And I remember us having that conversation. You're like, they can't travel in the same direction for too long.
No.
The people that got in the most trouble, they bought at the high price and in an increasing rate environment as well.
Exactly.
So some are predicting that home prices are going to go back to February 22 levels at some point.
Yeah, when the rates are back down to 2% and when the investors have forgotten all the nightmares they've just lived through.
Okay.
When's that going to be?
So
Nick?
my question for you is, CMHC published a report. They're a data company. They said that home prices will return to pandemic levels by the end of, I believe it was 2026.
I think they're stupid. CMHC was also the ones that took away the 5% down
payment. It was graduated down payment. It's now like we still call it 5% down, but it's we should be saying minimum down. If it's over $500,000, it's a graduated down payment. Right. You have to put more money down. Right. There's also the $1 million cap. Right.
And they also were the ones that predicted during the pandemic that prices were going to crash.
Mm.
So I don't believe anything CMHC.
So my question for you is that, do you see home prices returning to those levels, to February 2022 levels?
Not when I've lost that whole segment of investors.
Yeah.
And I've also not being able to get back to those ridiculous interest rates.
Yeah.
So I see them rising at some point? 100%.
Yeah.
They're not going to stay like this. The sellers have really had a problem right now. Like we're crickets. A lot of, we have tons of listings that aren't getting showings, and we encourage the people to stay on the market because we don't know when this changes.
Okay.
So at some point the prices will go back up. When that is, I don't know.
Yeah. I mean, when rates hit a 4% level, I think there'll be comfort in the market, right?
100%.
So let's tell people just in summary, okay? So from a mortgage perspective, fixed rates are very good.
Yep.
Okay. If you're renewing your mortgage, buying a home or anything else, if you're a first-time home buyer, you can probably achieve an interest rate of around 4.5% today,
if
4.6, 4, that sort of thing, and it's
Yep.
going to go down into the fall.
Yep.
If you're renewing your mortgage, you can get a very good rate. Shop around. There's a lot of competition out there.
But also, if you're renewing your mortgage in November, don't be locking in now.
No, wait.
You have to wait till the last possible
and
moment.
get great advice.
Yep.
Get great advice, And also, I would say if you're in a variable or adjustable rate mortgage, those calls come in every day right now. Is it time to lock in? And you know what I often have to tell people that are in an adjustable or variable rate? How does it feel to you? Because the answer is you will absolutely save money.
Yeah.
You rode out the storm. You have an interest rate currently of 6.5%. You'll lock into 5. You're going to save 1.5%. It is crazy. But you might be able to lock into 4.7, 4.6, 4.5, 4.4.
And this is where the
this
consumer
year
is so confused.
Right. So I'm how do you feel about that? Because the math, the metrics, the savings, we can do those calculations for you. How do you feel about it? Locking in today to something that you can get a better deal on in 3, 4, 5, 6 months. Heck, 12 months if you just wait.
I think personally, my advice to people would be, if you've ridden it this long,
wait, right?
Just wait it out.
Yeah.
Just wait it out.
I was talking to one of your agents about their own mortgage. We were just talking about them very recently. And they said, what do I do? And I said, listen, the payment is not a problem for you. Very small mortgage. How do you feel about it?
Yeah.
And they said to me, I don't know. And I said, then it's not time.
It's not time.
Okay, so if you're selling in this market,
Yep.
Tell me, what do we do?
The market is good.
Yeah.
It's not crazy. Showings aren't off the charts, but we still have buyers, and this quarter point is going to bring more buyers. So if you need to sell. You're fine.
If you don't need to sell.
If you don't need to sell, a lot of people are waiting.
Yeah.
But we don't know what this economy looks like at the end of this.
Yeah.
So if we get into a recession, prices are not going to go up.
Yeah.
That's really what we're looking at.
Yeah.
If I were buying, I'd be buying really soon.
That was going to be my
really
comment as well.
Soon. Buy even if you have to get a longer closing date, September, October, November. Chances are the rates will be even less by then. Yeah. So buy, but buy. You're not going to get low rates and low prices.
Yeah.
That's not going to happen.
Exactly. Yeah. And look for advice. So reach out
Yes.
to Peggy at peggyhill.com. You can reach out to us at mortgagewellness.ca.
Amazing.
Thanks for your time, Peggy.
Thank you.